it's Rose with EQUITY.GURU. Welcome to another episode of Hot Stocks, where this time we'll be turning our attention to DraftKings, which is adding some heat to the online betting industry. Market size of the global sports betting industry is at approximately $203 billion as of 2020. In the US alone, there is more than $150 billion of illegal bets placed every year on sporting events. And this might not be news to your ears, as we have heard that a lot of people receiving their stimulus checks in the US have opened trading accounts through Robinhood or have gone the sports betting route, or even both. So sports betting has become kind of a big thing, and DraftKings has been a hot one. As legalization of sports betting spreads across the United States and Canada, this shift in attitude could indeed place the fantasy sports service operating with the ticker DKNG on NASDAQ at the forefront, with plenty of room to take advantage of this black market. Okay, let's zoom out a bit. For those of you who aren't too familiar, DraftKings is an online sports platform that allows its users to play daily fantasy sports contests and win cash prizes. So depending on user interest, you can bet on any sport from football and basketball to golf and NASCAR. Knowing this, the coronavirus, I think I've mentioned the virus in every single show I've done so far, which goes to show how much it has impacted every industry. Anyways, the pandemic smacked the globe to a stop in March of 2020, jeopardizing or full-on canceling major sports tournaments. And interestingly enough, in April, DraftKings became public at a time when sports and casinos were shut down, and has since been one of the best gaming stocks you can find in an already hot area of the stock market. So why has this happened? Well, one of the reasons could be the change in gambling laws mentioned earlier, and the fact that fans want to feel engaged and continue to support their favorite sports and teams even though they can't watch it in person. So the pandemic seems to have fueled the esports industry. Now, in terms of numbers, after its initial public offering, DraftKings sold 32 million shares by mid-October at around $50 per share. It had reached its peak by October 2nd at a price of $63, but by the end of October, it had dropped almost half the price to $35. But it didn't take long for the sports betting operator to regain its losses. By the beginning of February 2021, it climbed back to $63 and gained some momentum, reaching a high of $74 by mid-March. April has been looking a little slower for the company, hovering around the $60 mark. It is still doing considerably better than its peers, though. So hitting closer to home, Canada is in the process of legalizing single sports betting, and our very own client, Fans Unite Trading with the ticker FANS, is a sports and esports betting stock, which has seen a monster rally. From the beginning of the year to mid-February 2021, Fans Unite has seen a whopping 100% increase in stock prices. For those of you who are curious, check out the links below. There is also a rumor going on that DraftKings may purchase Score Media and Gaming here in Canada, a media company that transitioned to betting and has seen the stocks with highs of $55. So while some experts expect the industry to grow in the years ahead, some believe that there is a lack of solid projections to justify the continued growth. So the future potential of the company remains to be seen, as the COVID vaccine distribution is well underway and sports tournaments are planning to slowly resume. But there seems to be no doubt that sports betting and betting on video games, which is becoming a sport on its own, is a hot trend for the future, with cities creating their own esports leagues and stadiums. And that's a wrap, guys. Let me know your thoughts in the comment section below, and don't forget to hit that subscribe button for more.